Testing. There you go. I got that this time before it was an issue. So, what's up, everybody? How was your guys' evening? How was your guys' weekend? Today, I want to talk about something very interesting. I want to talk about history. I want to talk about the history of Bitcoin. Can you guys hear me now, by the way? You should be able to hear me. Can somebody write something in the chat if they can hear me? Okay, thanks. So, today I want to talk about the history of Bitcoin. I want to talk about the fact that Bitcoin never repeats, but it does rhyme, and it has done many things in the past that it does sort of look like it's doing today. And I want to majorly talk about, for example, the volume, different dates, how long it took us to go to different places, and specifically having countdowns and stuff like that, because it's been very important for Bitcoin. And the fact that the halving is coming up next year, that's something very big. But let's start with something very simple. I want to talk about the volume first. So if I turn on the volume and we go on the monthly time frame, we can see, well, if my charts would load. Okay. We can see that in the past, when the volume would spike very, very high, it would indicate a top of a signal. So we would see a huge spike in volume. Now, the reason we see a spike in volume and after the spike in volume we would fall is because it's very simple. After these spikes in volume, people don't want to buy anymore because most of the people bought. What are these spikes in volumes? Well, volume is the amount of Bitcoin that is being bought or sold. Is there bullish momentum? Is there bearish momentum? How many people are buying? How many people are selling? The more people buy, the higher the volume is. It's a huge indicator to show the mass of people that are entering or exiting the market. So if hundreds of millions of people enter the market at the same time, who's going to be left to continue to pump to buy? Because to raise the market, you need to have people buying. And the fact that after this peak it starts falling down shows that once it gets to a certain point, there's nobody that wants to buy anymore, and sellers start taking profit, causing it to fall down. So the volume is one of the biggest indicators that you can use to see long-term support and resistance cycles, long-term cycles. So back over here, you can see that this dump at the COVID, there was a huge amount of volume. This was kind of a huge black swan event. COVID did cause us to fall down to $4,000. Nobody could predict that, but the volume showed that most people actually did sell, and after that, we had people buying in. But this showed that at $4,000, after we reached this area, nobody else wanted to buy. Nobody else wanted to sell, which meant that this was the new floor. For Bitcoin, when we reached $69,000, this level right here, the $65,000 area, the peak, the biggest area for Bitcoin, the biggest volume area for Bitcoin is actually not at the peak. It was a couple candles before the peak, and that was probably because we had this huge spike, and in the middle of over here, FOMO was starting to happen, but you could see that you could have just followed the volume and take profit at the volume. What I want to focus on is the fact that even though we had all these past volume candles, right now we had a huge red volume candle in November of 2022, so like about half a year ago, that was showing that this level, $25,000, was a place where a ton of people were selling. What this means is that this is their new bottom. This is the new floor for Bitcoin. Previously, it was at around $4,000, $5,000. Now it's $15,000. My bad. $15,000 is our new support level. And that means that the chance of us falling below $15,000 is near zero. Only will happen if there will be a world crisis, like back over here. Because our previous bottom was right over here at around $5,000. And now we fell down to $4,000. And the only way for us to fall down will be by having some kind of market recession or having some kind of global crisis. So that shows that we do see bullishness. Now, what I want to talk about, another thing, is that some people are saying that this is not a fast enough bull market rising up. Some people are saying that this is too slow of a trend. And compared to previous time, they say that, for example, $20,000, this pump to $20,000 in 2017 was much faster than what we're doing right now. Well, I want to tell you guys a couple things for this. First of all, we're not supposed to talk about price. We're supposed to talk about the angle of how far we're actually going. And second of all, I just want to say that Bitcoin is much bigger now. So this pump from 15,000 to 30,000 is about the same size of this $20,000 pump. But because Bitcoin is such a bigger coin than it used to be in 2017, that's why we are so high up, and that's why we continue to start rising up. This pump to $20,000 that used to be super, super high, we rose the same amount not that long ago by 6 months, and nobody's making a big deal out of it. That's because Bitcoin's so much bigger. People just do not understand that. But what I want to talk about is first, uh, by moving over to this other chart. Well, this is the same Bitcoin chart. This is the logarithmic chart. What this allows us to see is just the history of Bitcoin. Nothing has changed. The price has not changed. Just the way we see the price did change. The way we lay out all the candles did change. Now each candle is not, for example, $100. Each price level is not $100 apart. It's actually different, and it depends on how much price is in this area, which is why now we see this pump right over here, which looks huge, but this is actually a pump to $20,000, and this is a fall down to 3,000. That doesn't make sense. This is 20,000. This is 3,000. See, it's not price. It's not now. The Bitcoin chart is now not showing us the data by the price with the logarithmic channel. It's showing us now the price in a way for us to understand the whole big picture. I kind of didn't explain it very well, but basically, we're not seeing history through, for example, the eyes of somebody who would see it in the price, in the eyes of somebody who would see the level. If I can't explain this. If I grab a different chart that doesn't have logarithmic, I can explain this very well. So we have, here you go, an Ethereum chart. This is a regular chart. This is not a logarithmic chart, which I just turned on. Each level is each candle is a certain distance away. So that allows us to see price pumps and dumps very easily. So this was about $4. This was also $4. This is also $4. We can zoom out and in, and each gap between each price is about $4. But when you turn on logarithmic, it doesn't do that. It doesn't show price by the same distance. It actually changes the distance depending on how much data there is. There you go. That's a much better explanation. So going back in time, we can see that the angle of attack for Bitcoin, a Bitcoin rally, is always the same. So if we go back over here to the pump of $20,000, the angle of attack for this rise to $20,000 in the beginning was around, if I can grab my line that shows the trend angle, was around 23 degrees, okay? But by the end, this last leg up for Bitcoin was actually around 60 degrees. So there was a huge change at some point. So this 20-degree rise for some people would be very, very slow. They would wonder, why after this huge dump are we not instantly rising up once again? Well, we are in the cycle, but this is just the first part of the cycle. The cycle does not start always straight up. It actually goes pretty slowly until we reach a certain point where half the people are already in and we have that last leg up, and that actually shows the end of the pump. What I'm trying to say is that we are doing the same exact thing right now. We are going at around 20 degrees, 30 degrees. And I just want to show you that this 30-degree level is slow for some people. It's slow for a lot of people. But it will come to a point where we will be rising up and we will have a 60, 70-degree level. But this is a long-term bull market, so this will not happen instantly. That's something that, using the history, we can see that repeats a lot. So if we go back to this pump that took us to $60,000 to $70,000, in the beginning, after this dump to COVID, we reached $8,000, $9,000, and we just were rising very, very slowly. This was a pump at about from here to this level until we started rising up. That was also about 20 degrees. We were rising at about a 20-degree angle. But the last leg, this last pump right here, was 60 degrees. The angle of attack shifted, and it wasn't instant. It took us about a year to actually recover from the dump. That's another thing I want to talk about. So the time between recessions, between peaks, is actually growing bigger over and over time. So we have the Bitcoin history. This is the whole entire Bitcoin history back in the day. This is the first pump Bitcoin ever has done. This is the first cycle. This is the second cycle Bitcoin has ever done, and this is the third cycle Bitcoin has ever done. So if we go back and check this cycle, this was the cycle that took us to $1,000. Believe it or not, this is 1,000. This is the cycle to 20,000. This is the cycle to 60,000. So it's just this weird chart that doesn't show us data in the correct way, but allows us to see history. So what I want to say is that the pump up to this $1,000 area was 700 days. But what I want to say is what I want to check is the pump from the bottom to the next bottom. That was 1,100 days. Now let's check that again. The bottom from this level to the next cycle bottom was 1,400 days. Now, if we check that once again, the bottom from this previous low to this low where we are right now is once again 1,400 days. So Bitcoin's history shows us that our cycles last about 1,200 days. And so far, we have been following that law. We have been following this law that causes us to go about 1,500 days into one cycle. So following this move, we can also check how long cycles will last. So this pump up to $1,000 back in the day was around 742 days. And after that, we actually had a dump down to the low, which was 86%, and it was 400 days. Now, if we grab this level right over here, you can see that this pump up was 1,000 days, and the fall down was, if I can grab it correctly, the fall down was about 400 days, no, 370 days once again. So the last rise up was 1,064 days, and the fall down lasted 400 days. What this is meaning is that the rises up, the bull markets last around 1,000 days, and the recessions last about 400 days. So we do have a clear time frame. We do have a clear time of when and how long it will take us to reach the next peak, and that is about 1,000 days from the previous bottom. 1,000 days from the previous bottom is in 2025 of August. That does make sense. If we continue rising in our 20-degree momentum, then we will get there by 2025. But of course, we're not going to be going straight up the whole time, just like we have from this bottom, which I'm not counting COVID because that was a black swan event. This was a crisis event. We don't count that. From this bottom, we didn't go straight up. We had these falls and rises that continue to go up. So if we will continue to rise up, if we continue to rise up in this level, we will reach it by 2025, but that's impossible for us to do that. So we will see a fall somewhere in time, but we will see that last leg up, pump up. It will not be instant. We will see the same exact patterns as we saw back in the day, in the long term. So back in the day, we were moving sideways for a while, almost sideways, going up slightly, and then the last leg was long but fast. It went by so fast. It was literally 200 days of upwards motion, and this sideways action was 200 days also. But because people were making money, it passed by so fast. And what I'm trying to say is that this level, we've been going sideways, well, not sideways, but going up for already about 300 days. This sideways action could go on forever, and people will start getting bored, but this is not something that's weird. This happens in every cycle. And soon, By 2025, we will see the next peak. And the next peak will be higher than this $70,000 peak. 100%. It always is. There are always cycles. We reach the higher highs and higher lows. The previous peaks always get beaten by a long shot. So we can actually see that by checking the percentages. So if we check the percentages of each cycle, it becomes very, very interesting. If we check percentages of this pump to 1,000, that was wait, what? 50,000%. It was a crazy rise, but that was because Bitcoin was more volatile. If we check the percent of this $20,000 rise, it was $12,000. Okay, not that much. It got cut in half. Now we check this much. Okay, that was $2,000. What is happening? Why is the percentage getting much, much smaller? Well, it's because Bitcoin's market cap, Bitcoin's volume is getting so much bigger, and because there are so many people now riding this wave, its percentage is actually counted a lot differently. 50,000% then and 50,000% now is completely different. 50,000% then was crazy. 50,000%, if we take 50,000% now, well, 50,000% will take us all the way up to, what is this number? $17 million. It's almost impossible for Bitcoin unless we get enough people. So these kinds of pumps, even though they look small, this pump to $1,000, that's such a crazy pump compared to where we are right now because Bitcoin is so much volatile. What I want to talk about the most is the halving. Something very interesting that's happening is the Bitcoin halving. So every 4 years, we get something called the Bitcoin halving. There is a block reward for miners when they mine Bitcoin, and every 4 years we get it cut in half. The block reward used to be 25, and then it went down to 12, and then it went down to 6.5. And in April of 2024, it will be cut in half once again. And these lines, this indicated the Bitcoin halving rainbow, shows us how far we are from the Bitcoin halving. So these are interesting market patterns. So back in the day, you can see that a blue line means that we are literally 4 years away. We're the farthest point, and it slowly shifts over to red the closer we get. And what's interesting is that we've been following the same exact market patterns almost the whole time. So in the beginning, we had a small sideways action in the blue area before initial pump in the teal area, a small dump in green, but continuing to rise in this green area once again. But what's interesting is that this peak happened in the bright green, and we had a fall down while we were from green to yellow, and stopped somewhere in the yellowish orangish phase, and then we went sideways up but sideways for a while. The next couple years, we went sideways but up for a while until reaching the halving, where we had a small pump but a dump once again. We went sideways and we continued this rally. We went up till we were the green, and then we fell down until we were yellowish oranges. And then we had a slight pump up or a slight fall down, but relatively going sideways. And what's interesting right here is that we're actually following the same thing. We had a sideways action right over here before initial pump, but this was not the end. We had a fall down, and then we had a last pump in the green. A fall down until we were in about yellowish orangish, and now we started rising up, but somehow going sideways compared to everything else. This shows us that the market repeats, but the market rhymes very, very well. We've been doing almost the same exact thing every 4 years, primarily because of the Bitcoin halving. Once we reach this point, what we could see in between this point is rises and falls that makes it look like we're about to break out. But we will stand in this area, probably not breaking the market top until the halving. But after the halving, we will see the next rally very, very close. How many days passed after the halving that caused us to rise up? 140 days after the halving, we actually started rising up. Over here, also, 140 days passed and we started rising up. And over here, we can see that, 50 days. That's because I didn't calculate around right. We can see this sideways action until we reach this level. So how we can count it is basically the initial price of where we were at the halving to the next area, which was, how I'm trying to calculate it, about 50 to 100 days. So this level of sideways action always lasts 50 to 100 days after the halving. Not that much after the halving do we start rising up once again. And about 50 to 100 days after the halving, we can see this pump up, which will be June of 2024, in about straight a year, a little less than a year. So does this mean that we will be going sideways the whole time? No. We had major pumps and dumps the whole entire time while I was saying we were going sideways. What sideways means in the long term is that we are not making a huge rally that breaks the previous high, the previous cycle. We are not making that bullish cycle. We seem to be doing it sometimes, but then we fall down once again. And people were wondering what's happening. What's happening is that we are gaining momentum for the next pump. We've done this already 3 times before. People just don't understand. So we can see that we will probably see some pumps and dumps in the shorter time frame, but overall we probably will not see a pump up back to 70,000 in a while until the Bitcoin halving. Maybe we could reach, for example, $50,000 and stay there, have a small pump, dump, and then continue rising. We could see that, but breaking and starting a huge rally up, that is not seem logical at this stage. Also, speaking of Bitcoin technical analysis, if I was talking about this for a while already, if my chart loads, I've been talking about this for a while already. We have this channel that we are right now inside of. And as long as we stay inside of the channel, we will go in this about trend angle. We will go at about 20 degrees up until we either break up or down. And the fact that if we break down, we could fall down to around $23,000. That is not the worst thing that could happen. That is actually part of the plan. Part of the plan of the Bitcoin halving is that we will be going sideways or up a little tiny bit in the long term until the year 2024. Of course, we could reach $50,000, but we will be going sideways around this level. We could stay inside of this channel and bounce around inside of it, even breaking out of it occasionally, fall, and then coming back inside of it. We can see these pumps happening. Looking at the big picture, looking at the history of Bitcoin, it shows that we will be starting to rise up, but in the shorter time frame, we do not see a logical explanation for us to actually start rising back to all-time highs. We do not have the momentum yet. We can actually check this momentum by opening the volume and checking how much money is actually going in by people. Our biggest momentum spike was just the bearish momentum when we fell down here, and it's been slowly going down. Momentum is not going up. We have no people that are trying to actually buy in. Ever since this fall right over here, we've been just having a decrease in momentum, and we've actually been seeing that in history all the time. After this initial dump, we see a decrease in momentum, and as soon as this momentum starts increasing, that is when we see almost the initial pump of the next bull market rally that looks like a clear Bitcoin rocket to the moon. So if we are following previous history, then we could see this decrease in volume until we see a huge spike. Once we see that huge spike, once the Bitcoin halving happens, that's not the Bitcoin halving, once the Bitcoin halving happens, we could see the huge rally up. But using history of Bitcoin, we can tell that Bitcoin will rise. Now, in the short term, I just want to give you guys a small technical analysis on the short term and give you guys a small update of what Bitcoin has done. Bitcoin has done something very, very interesting. Bitcoin has given us a new indicator. We have broken out of this channel and are trying to confirm support on it right now. If we confirm support on this level and start rising up, well, we might be able to see levels at around $32,000 in the shorter time frame. But this does not look, this indicator that I see, this yellow lines, these are not promising indicators. This is actually a bearish indicator on the short term. So if we confirm support at this level, of course, we could rise up to $30,300. I've been talking about this level for a while. If we break 30,300, we could rise up very, very high. I was talking about that. Problem is, this resistance line is now at 30,300. So if we break this resistance line, that will basically cause this whole indicator to not work. Why do I want this indicator to not work? Well, because this is a bearish indicator. This is an indicator that could take us down to 28,300. Of course, 28,300 is a big price, a big target for us to hit. If we hit 28,300, it will be a continuation of our cycle. We have tapped this trend line 3 times before. If we tap it one more time, it will be very, very good. It will be a great support for us. But this will hinder our pump for at least another 30-40 days, and we will not break this level for another 34 days. And this is not the only indicator that shows us that we could fall down to this level and cause us to go sideways for another 30-40 days. If we look at the previous rises and falls, going back in time, once again, checking the history of Bitcoin between each cycle lasts about 400 days. Take this cycle, for example, and this cycle lasted 80 days. This cycle lasted 90 days, 400 bars. And now we have this cycle, which lasts only 60 days. That doesn't make sense. So it's a bit too short. In my opinion, we have to fall down a bit more. But how it looks like right now, we could see a fall down to around $28,000 if we break this support. This is a bear flag. This is a bearish indicator. If we break this support, we could see a fall down to here. The only way for us to not see this fall, the only way for us to see a pump to $32,000, which this bull flag is saying we could rise to, is for us to actually break past 30,300 to break out of this indicator. But at the rate of the momentum of the market in the short term, this does not seem likely. It seems like we will see a crash unless there is a huge momentum change. For us to see some momentum, we need to see some bullish news in the real world. Except for the Bitcoin halving and some of the ETFs, we have no huge momentum. People can't even figure out if they're bullish or bearish yet. There's a huge tension. I've been talking about this for a while. The crypto fear and greed is still at 53. It's still super neutral. People are still very skeptical of Bitcoin rising, and they cannot figure out what it'll do. Bitcoin is just in a very big sideways state, and until people figure out what to do, we will not go anywhere. We will continue to go sideways. Even if we go sideways, I'm saying we could reach this yellow line, this orange bottom support level very, very easily. If we continue to go sideways, well, we can reach this level by, for example, September of 2023. If we decide, and that would mean that the time where we break out of 30,300, starting the next bull run up, could take us all the way up to literally September, the end of September. So going sideways will get us here. It will show us that we are continuing the cycle, and it will prove most of these indicators right. Going sideways is one of the biggest things we can do right now. The tension will grow until we figure out what we will do. Will we either break down to confirm support at this level, or will we break up? That's the biggest level in the short term. That's the biggest thing for us to look at in the short term. What I think will happen in the short term is for us to confirm support at this level. If we confirm support at this level, we will reach 30,300. And that's where the biggest thing, that's where the biggest decision point will happen. If we get rejected, well, we can probably either see a sideways action over to here or a quick dump down to this level, which is 28,700. If we do see a dump down right now, same thing. We will see sideways action or a fall down to this level. But whatever happens, we will see a rise somewhere in September. We will see the next pump up happen in September if we right now break this level. Until then, we will be falling and going sideways and rising up maybe a little bit for the next couple of months in the short term. And that will, of course, follow this channel on the larger time frame, which will also follow that huge indicator with the halving. The halving cycles are one of the biggest cycles, guys. Now, this is what Bitcoin is doing in the short term, mid-term, and long term. I have nothing else. If you guys have any questions, if you guys want me to do any technical analysis on any cryptos, just write them in the chat in the next couple minutes. I will give a couple minutes for anybody to write any questions in the chat. Until then, I'll quickly recap what I've been talking about. So, here's a quick recap for you guys. Bitcoin's history shows us that we take about 1,000 days to complete each target channel. Now, Bitcoin's indicator, the halving, if I can pull it up once again, Bitcoin's halving indicator shows us that until 2024, we could maybe not see a pump. We could see some sideways action only. We could see just a slight rise, but we will not see a pump past all-time high. We will only be going up or slightly sideways. We might see some big dumps and pumps for some people who trade day or swing. But in the long term, if you're an investor and you're waiting for this rally to $50,000 or $100,000, you will not see that until April 2024. In the shorter time frame, of course, we could see this pump up to around $30,000. That's what that channel is for. This is what this bull flag is for, what I'm talking about in the shorter time frame. We are inside of this big channel that's causing us to go up slowly. And until we break out, we will continue to go inside of this channel slowly. And right now, we're almost tapping it to the bottom. When we tap this level at the bottom, that is the 100% signal that we are going to start looking at. Somebody said, can you look at the S&P 500 and compare it to Bitcoin? That's a very good thing to do, actually. So I believe I have it saved somewhere. If not, we can actually just look at it like this. So if I pull up the S&P 500, which Bitcoin follows very, very closely, that's not the way to do it. If which Bitcoin follows very, very closely, if we look at them, you can see that they follow each other very, very well. The S&P 500 actually leads Bitcoin. Whatever S&P 500 does, Bitcoin just follows. So what that means is that if there's a dump in the S&P 500, Bitcoin will also fall. Of course, Bitcoin is more volatile, which means that a fall from the S&P 500 will see a bigger crash for Bitcoin. Now, as you guys can see, Bitcoin actually leads the way in dumps, but S&P 500 is the first to actually start the rally. And that is because S&P 500 is less risky. More people know S&P 500. So when a reversal is about to happen, the first place that investors start to jump into is S&P 500. Now, Bitcoin is, of course, more risky. And those traders that trade stocks also trade crypto sometimes. Of course, not that much, but there are people like that. Problem is, when a dump happens, the first thing that investors sell are the riskier assets. Crypto is the riskier asset compared to stocks. They dump more. They are more volatile. Specifically altcoins, other new cryptos that don't have that big of a market cap. I showed you guys back in the beginning of the live stream that Bitcoin had a $50,000 pump that was a pump to $1,000 from 200. It was an $800 rise, but it was 50,000%. That was crazy. That was because Bitcoin was so small. And those altcoins are very, very risky. They're super small. And what that means is that the first thing that investors will sell are the altcoins in a bear market or in a dump. The next thing is, of course, Bitcoin. So Bitcoin shows the dump next. And last but not least, S&P 500. So Bitcoin dumps first, but the rise with the S&P 500, S&P 500 leads the rise because investors like to invest into S&P 500 first. When we're looking for a reversal, we can check S&P 500. And what's very, very interesting is that S&P 500, if I actually open it by clicking on stocks, I have a preset for this. If we look at S&P 500 itself, it's actually doing an indicator. Give me a second to open it. We can see that S&P 500 is right now confirming support. This is the daily, this is the monthly time frame. It's right now confirming support on this 50-day moving average. If we manage to confirm support at this level, we could rise up to about 4,500. This will be a 0.87%. Yes, not that much. That's because S&P 500 is not that volatile. It's very, very long term. When you're investing in S&P 500, you better have some good money and you better be going in there long term or have a very good leverage position, have a very large margin trade. So, because S&P 500 is very, very, and I'm telling you, it's so much less volatile than Bitcoin. It goes sideways, it goes up. But that is primarily because S&P 500 is so big. And just like Bitcoin, S&P 500 is also going through a huge level right now. If we go on the smaller time frame, you can see that we have two huge indicators that we are about to test very, very soon. These indicators are the 20 the 24 hourly and the 54 hourly. These are huge indicators. If we get rejected on that and we fall back down and break this level, that could be a huge fall for S&P 500. And like I said, Bitcoin leads the fall. So if anybody's looking for stock analysis, well, then you can look at a dump from Bitcoin and see that a couple days later, S&P 500 will actually fall. But with that being said, if you guys enjoyed this live stream, I hope you guys will enjoy the next one that will happen tomorrow because I do these live streams daily. And with that being said, I'll end the stream here.